Hi there, good morning. My name is Victor Louis, and I'm the head of investment strategy at Sankore Global Investment. This is your weekly insights into financial markets. We start off in the US market, where stock rose on Friday after a revision to December inflation numbers came in lower than expected. The S&P closed above the key 5,000 points mark on really strong earnings reports and positive economic data. On Friday, the S&P rose 0.57%, the Nasdaq was up 1.25%. However, the Dow slipped 0.14%. For the week, the S&P was up 1.4%, the Nasdaq rose 2.3%, while the Dow was flat. All averages essentially notched their fifth straight winning week. A December inflation was basically adjusted downwards to 0.2% from the 0.3% that we had seen in the initial reading. This again just further entrenched the sentiment that inflation was continuing to decelerate at a decent pace, and that the Fed really was essentially going to engineer this so-called soft landing. Also, a robust earnings season has seen about 67% of S&P companies reports, with 81% of them beating analyst estimates. Now, this compares to a 67% beat rate for a typical fourth quarter since 1994. So clearly, earnings are looking much stronger than trend, and this has created a really strong, sentiment for market participants. Going into this week, we expect about 61 companies to report earnings this week. So the earnings slate continues this week. However, we also expect some economic data on Tuesday. We expect CPI for the month of January, to be out. Further down in the week, Thursday and Friday, we expect to see retail sales. We also expect to see some production data as well as trade data. So imports and export data should come out Thursday and Friday. I mean, all of these should help shape, near-term, market sentiment. So this week, we'll basically be looking to earnings and also data on the economic front to drive sentiment in the U.S. market. Concerning the Israel-Hamas situation, on Friday, Moody's downgraded Israel's credit rating for the first time ever, really citing deteriorating finances and materially higher debt burden due to the ongoing conflict. It also cites the fact that the possibility of a northern front opening up with Hezbollah remains a major risk that could even further deteriorate the financial situation of Israel. Now, over to Nigeria, really, the major thing that happened last week was the treasury bill auction. In reaction to that auction, really, we saw a bearish sentiment in the market for the better part of last week, because the DMO basically revised the offer from about 400 billion to 1 trillion. So these basically saw market participants sell off their bills in anticipation that, we're going to get higher stock rates. So we saw that happen, and that created, a bearish sentiment in the market. I mean, following the outcome of the auction, which bid to cover closed at 3.1 times. The 90-day paper closed at 17.24%, which was 1,224 basis points higher than the previous close. The 180-day paper closed at 18%, which was 1,085 basis points higher than the previous close, while the one-year paper closed at 19% stop rate, which was 746 basis points higher than the previous rate. Like I highlighted earlier, bid to offer was 3.11 times. All of the on-field bids that we saw, at the auction. So at the 1 year, the DMO wanted to sell 600 billion. They ended up getting offers of about 1.8 trillion. So that was about 3 times the offer. So all of those bids that were not failed essentially filtered in through to the secondary markets, and that created some bullish sentiments, albeit temporarily. But again, that trend was sort of reversed in the course of the week, and Treasury bill yields closed 117 basis points higher across curve. The bond market was pretty much driven by the same sentiments. In the aftermath of the auction, we basically saw cherry picking by market participants as they essentially traded cautiously in anticipation of the outcome of the MPC meeting that's going to happen at the end of the month. However, yields rose about 18 basis points across curve. So the bearish sentiment still essentially held sway in the bond market. So in all, this week, earnings from stocks in the US and also data points on inflation and retail sales will really determine market direction. While on the local front, we'll continue to keep an eye on the fixed income space, particularly with respect to liquidity and the impact that is likely to have on fixed income yields for this week. We thank you very much, and we do hope that you have a very productive week. Thank you.